Is private equity an alternative investment? Well, the good news is, yes, it is. And I'm going to tell you how you can actually do that without having to invest millions of dollars. All right, so when you think of private equity, do you immediately think, oh, it's just a bunch of guys that wear suits, fly in private jets, have $1,000 lunches and all that kind of thing? I get it. That seems like the typical private equity thing, and there is definitely big money there. But there are ways you can actually do it with less money. You do not have to be a multi-decamillionaire to be able to invest in private equity, but there are some things to look out for and things to watch for to ensure that you can actually make money in this space without going broke. All right, so what is private equity? Pretty simply put, private equity fills a nice need in the marketplace because we always hear about investing in stocks, right? There's stocks, mutual funds, even though a mutual fund is still a portfolio of lots of different companies, but these are all publicly traded companies that are on the open stock market. Anybody can throw money into them. It's just free game. But there's a much bigger section of the market, and it's becoming more popular, of companies that don't want to go public. They don't want to be dictated by all these people that are shareholders and board of directors in that sense, right? They don't want to be on the open market. They want to be more privately owned because a lot of small businesses do like to be privately owned. Even larger businesses might even take this path. And so now there's becoming more and more of a need for people to be able to privately fund into these companies to help them launch their goals and objectives for years to come and whatnot. Plus you, as that investor, get to share in the profits as well. But traditionally speaking, usually you have to be in like some hedge fund with some money manager that has special access to these kind of companies. But the great thing is as we've progressed as a society, as we progress in this alternative investment game, there are more and more opportunities that you can actually privately invest in these deals, still take the gains, right? And still be able to profit off of these companies doing great things. And many times you might even be able to know the owners versus money managers where you don't even get to see who these people really are. So the real question is how can you actually invest in this? How can you invest in private equity? Now you might have seen me do other videos where I talk about the 4 asset classes, right? There's paper assets, which are typically stocks, bonds, mutual funds, savings, CDs, things like that, money markets, all the stuff that financial advisors offer. Now I talk about Warren Buffett because Warren Buffett invests in companies. Even when he buys publicly traded companies like Apple, for example, or American Express or Costco or Coca-Cola, right? He's a big shareholder in those companies. So when he invests in companies, he wants to make sure that he's one of the top guys in that place. Like one of the guys that has the biggest ownership so that when a big decision is to be made, he wants to be on that board of directors. Now you may not have that ability because you don't have billions of dollars hanging out of your pocket, right? And just leaking out everywhere. You're like, hey, I just got a little cash for you. You just throw it everywhere, right? It's not like that. I mean, you obviously want to be very intentional with your money. But like Warren Buffett, you can also invest like him. For example, Warren Buffett also buys private companies. Here in Utah, there's a local furniture store retailer that he actually has ownership in. He actually became the owner of that company, bought it from the CEO. And even when it came time to make decisions, he would actually put his own 2 cents in. He would tell the CEO at that time, he'd say, listen, like I know you want to go into Vegas, but Vegas is not a good market because you guys don't like to be open on Sundays. So I know that with the research, Sundays are a big day for a place like Las Vegas. Well, that owner said, well, what if I tried out Boise, Idaho, which is very similar to Vegas, other than, they look very different, a lot less lights in Boise, but very similar markets and how people buy. And so he tested it up there, found out it did work, and therefore Buffett said, let's open a place in Las Vegas. And you can actually be in a place where you could be a majority shareholder, but you don't have to be, right? That could be a good thing. If you want to have more control of your money, being a majority shareholder is good. This is also why Warren Buffett, when it comes to Apple, which is a publicly traded company, he actually sold off half of his shares recently because he started to see some writing on the wall. He started to liquidate some of his investments. Now, if you invest privately in these companies, you may not be able to liquidate your money at any time. It's not as easy as just buying stocks. It might be something where you're locked in for a certain period to ensure that that money is working, right? So you got to be careful. Now, what are different ways you can do that? One, you can invest in franchises. There are franchise models out there where you can be a part owner in that. I will tell you this, if you want to invest in private equity, for the most part, you do need to be what's called an accredited investor. Accredited investor sounds nice. It sounds like you're somehow special. You're really not. You don't have to be any smarter to be an accredited investor. You just have to have enough money. So either one, you have to be earning enough money. Your income has to be at least $200,000 a year if you're a single person, or $300,000 a year as a married couple, and do that for the last couple of tax years. Or 2, You have to have a net worth of at least $1 million that does not include your own private residence. So if you can qualify for one of those two things, you're an accredited investor, and this whole alternative investment game becomes wide open for you. There are so many more opportunities than being a non-accredited investor. And so when it comes to these kind of opportunities, for example, I mentioned a franchise where you might be pooling your money with other investors, like a syndication, which is when you pool money with other investors to buy a certain asset. Maybe it's like a car wash, for example. You might pool money with other investors, but they might require you to be this accredited investor. If you're not, it's not really an option. However, if you're someone who's a non-accredited investor, but you want to have ownership in a franchise, maybe you've got the cash, you just don't have the numbers to qualify, you could actually be the sole owner or a partner in a franchise model. So and rather than pooling your money with other investors in a big syndication where you might be raising millions of dollars, you might be able to get into a franchise for as little as maybe $30,000, $50,000, maybe $80,000. I'll tell you this, the cheaper the investment, the more likely you have to put your own time and energy into it. So if you want to be hands-off, right, where you want to be more in that equity space, but you don't have to be the one in it, then one of the best things you can do is actually be able to buy into it more. This is why you may or may not need a partner, because usually if you're spending at least a couple $100,000 for a franchise, and I'm not talking about all the burger franchises or things like that. I mean, like sometimes it's just like junk haulers, for example, right? It could be opening a gym. It could be renting to other hair salon owners, and you have the building that you can rent out and lease out to them. There's a lot of different ways to do that. That is a great way. You can still have really an investment into business, but it doesn't require you to have, again, millions of dollars. It might require tens of thousands. It might require a few $100,000, but a franchise model could be a great option for you. Now, on the private equity side, like I said, there are sometimes syndications that can go into these deals. I will just say this, be very, very careful. When it comes to business models can be good or they could be bad, right? You just never quite know what's going to happen. I personally, when I look at business models, I like to see how recession-proof are they? Are they only good in certain types of markets versus others? Is there a way that they can shift and move? Are they adaptable that even if markets go bad, even if people start cinching the belt, if it's like a retail type of establishment or something, can they still be profitable? Can they still make money? Business, I'll tell you, is a risky venture. That is why, if I like to go into business, I usually like to be more like Warren Buffett. I like to be in the place where I have more of a say in the matter, more controlling interest, things like that. I'll give you an example, Ryan Reynolds. You guys know him, he's a great actor, probably my favorite comedian and actor of all time. Ryan Reynolds is a fantastic person, but he's also a great business owner. If you guys have seen, like he's got his alcohol company, right? He's got some other things. He got like into cellular companies and things like that. You'll notice that what he does to control his investment, to make sure that he gets a good return on it, is that he becomes the brand. He becomes the spokesperson. He becomes the one that says, hey, I'm not just an investor, I'm also the owner, and I like to be the spokesperson, right? And he does an amazing job. He's like a marketing genius, even though he's not really a marketer per se, but he does such a great job branding himself within his own companies. So when he does that, he makes sure it's one, as a company he can believe in, but two, he also makes sure he puts himself into it to ensure that that investment comes back to him. And he's actually probably going to be one of the few billionaire actors that you'll see out there here in the near future. So great example of how he can make private equity work, if sometimes it might just be that you become a big partner in that deal. So as I said, if you're not an accredited investor, your best option is probably the franchise type of model. And it might be where you might be the sole owner or have a partnership with somebody else, but it's going to be very small. Now, again, there are ways to invest in other ways, right? With private equity, but it usually requires you to be an accredited investor. It might require millions depending on the investment opportunity, but there are several that are not. I would just be sure that whoever you're investing with, make sure that if it's a company that's connecting you to them, they've got a good reputation. Make sure it's a company that's been around doing this kind of game for a long time. So I would just say that just beware, right? Investor beware. I'm not giving investment recommendations, but if you're going into that private equity space, just know that it can be high risk and potentially high returns, but it can also be high losses as well. All right, so I know there's a lot of other opportunities, a lot of other things you could be doing too. There are a lot of ways to be in business, but not have to be in business. There are things you can do with that, or even real estate backed. If you want to learn more about what kind of investments can you be doing, first, like and subscribe on this channel. Secondly, please comment below if you've got an opinion on private equity, whether you've loved doing it or not, maybe you haven't tried it. Put a comment below. I'd love to hear what your response is about this very thing.